sentiment is quite bad. I actually think that's an opportunity to buy now because it does look like some of the indicators, apart from obviously the horrible situation we have in Israel, that some of the indicators are turning more positive. So despite this very negative sentiment, we've just turned more positive on equities.
Maximilian, you published a really eye-catching piece on German equities. There's been a lot of debate over the last few months about whether Germany should be considered the sick man of Europe, which a term that was coined several years ago. But you say that's not the right term to be using. Instead, we should think about Germany as the sore athlete of Europe. Elaborate for us on what you mean.
Yeah, exactly. So sick man is way too bad of a term. Sore athlete makes more sense because Germany is actually in a pretty strong position, right? I think there's some homemade problems that we currently have in Germany, and there's some exogenous shocks. So homemade, obviously, electricity prices, for example, gas prices, that's been a problem due to politics we've had in Europe and Germany especially. But there are also some external exogenous shocks that we've experienced in Germany, and they might be fading next year. For example, manufacturing is currently in recession. Germany is still a big manufacturing hub. If this was to turn next year, and if you look, for example, at some of the PMIs, it does look like we're close to a trough, then that will be actually pretty positive for Germany. Also, if you consider Germany's exposure to China. So Germany's export to GDP exposure to China is about 5 times what it is for the US. So if we do see a recovery in China, and we think we're pretty close to that, at least to a stabilization, that could actually also turn a lot in Germany. And, more from the investor perspective, don't overestimate the impact of German growth on German stocks. If you look at the DAX only makes about 20% of its earnings in Germany and 80% outside. So actually global growth for the DAX is more important than just the local German growth.
It's a good point as we talk about it being somewhat of a global index. In terms of some of the opportunities you see in that market versus some of the challenges, just flesh that out for us.
You mean generally in equity markets?
German market in particular, around energy costs, for instance, being one of the challenges.
Yeah, so I think the energy problem is probably not going to solve overnight. That's going to take quite a while, right? We are very ambitious in Germany in the energy transition. That is going to cost money. So that is going to remain a problem most likely. But energy costs are not really the main concern of companies in Germany right now. Main concern is exports. Germany is a very strong export-oriented country. So if we do see just, the current pace of GDP growth in US continue, that'd be a good sign. If we do see, as I said, a bottoming out in Chinese growth, that'd be great. If we see more CapEx, maybe due to the Green Deal in Europe, that'd be another positive. So there are a few reasons to actually turn more positive on European and especially German stocks for next year.